Dear viewers, welcome to this edition of Your Life, Your Money. We are still in the first month of the year 2023. People are looking out for opportunities to invest during the year. In this video, I'm going to make an attempt to find out where does the opportunity lie? Where can you invest? You could be living in a different country and the normal thing what is available for a resident Indian may not be available to you as an NRI. Keeping the NRI community in mind, I'm going to discuss the various options you have to invest either in India or outside of India. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, the first thing that you have to keep in mind in the year 2023 is the world order is changing. What is its significance? Why I'm referring this point or stressing this point? The reason for this is whatever you saw in the past is not something what you are going to see in the future. In the past, US was a dominant force. In the past, the dollar was a very dominant currency. In the past, you had seen how the economies will fare in an interest regime which is closer to zero. All these equations are changing. So if you have a rear view mirror and you are opinionated because of the rise in the dollar to rupee or the rise in US equities, going forward, you should clean that image and you should see the world from the front glass and not from the rear view mirror. If you are still guided by what you saw in the rear view mirror, probably it can be a road to disaster. So clean up and do not worry what happened in the past. Look ahead and start investing now. Point number 2, do not get carried away by the articles you see in the major newspapers like Washington Post or New York Times or any other newspaper for that matter, or even in the television debates. Most of these debates or the articles which are written have nothing to do with the ground reality. These are the opinion creating articles. There are reasons why people publish it. Let's not get into the debate of this. As an investor, the only thing that you should do is look at the hard facts, look at the data, consult a professional and take opinion from them. That should be your guiding force. Do not get carried away by the opinions, the tips you decide or the articles you read. If you follow this simple principle of getting guided from data or professionals of impeccable character, then you will have a successful investment journey. If you are an NRI and if you are looking to invest outside of India, I am sorry to say this, your opportunities are becoming limited. You can almost say there is not much of an opportunities which are visible to me. The real opportunity to invest outside of India is not in the equity segment, but the opportunity is in the fixed income segment. In the last 20-25 years, we saw a regime which is interest of less than 1%, and that's what you had seen. Now we are seeing a regime of high interest rate. This high interest rate regime will not go away that easily. So that means to say, you have to look out for opportunities in the fixed income space. If you are a person who want to invest in dollars, look out for safe opportunities in the fixed income space and not in the US equities. In case of fixed income, where can you find the opportunities? The real opportunity right now is in the bonds which are short duration. You should not pick up a bond which has long maturities, maybe 1 year, 2 year maturities. That is where you can make a decent amount of money without taking any risk. When the interest rate starts moving towards peak, which could be the fag end of 2023, and I do not know whether it will stay there, it will fall down there, I have no idea, but when it is about to reach peak or at its peak level, that is the time the opportunity can be found in good quality bonds which have long maturities. This is a very safe investment looks like, and the equities are not the place where you can park your money now. Many Indians as well as the NRIs think it's the US equities where they have to park their money. I beg to differ here, and it is not something which is very comfortable to invest in US equities now. Nothing which I observe is in favor of equities. probably the US markets will not see a lifetime high for many years to come. This is evident. For a stock market to move up, certain preconditions are required. Number one, the growth. With the recession that is coming in, the growth is something which is depleting. That's not there. The markets require liquidity. If growth is not there, markets need liquidity, abundant amount of money supply into the market. What is that the Fed is doing now? It is sucking out liquidity at a rate of $95 billion per month. The fuel which is required for the market is being sucked down. The markets also need low interest rate. Where are the interest rates now? Interest rates are heading upwards. They have still not reached the peak. So that is also going to become a hurdle on this. Then the next thing that is required is the sentiment. Sentiments are already affected. You have all the bad news in the media now, and people are worried about losing the job. So sentiments are bad. So if you look at the 3 to 4 metrics which is required to push up the stock market, none of these things are showing any possibility of equities moving up. What might happen in the equities going forward? In my personal opinion, US equities will have a bounce up, bounce down, but if the markets try to bounce up, the selling pressure will come on the top and they will slowly start drifting down. It is not going to be a crash. The major fall down in US market has already happened. It is not going to be taking a major leg down, but it is going to be a prolonged drift down which will happen. In between, the markets may react to some good news or perceived good news, but do not take that this is going to be a bull run or this is going to be something starting of another bull run. Do not get trapped in the US equities. Where else can you find opportunities for an NRI outside of India? Unfortunately, in the equity space, there are no opportunities which are visible, which are safe, which look secular anywhere in the world. Maybe you may find some small pockets, small countries, but that's not something where you can park your money. You look at a Eurozone. Where else can the NRI community find opportunities in the equity space? Unfortunately, no other country offers a good possibility for you to invest in the equities. Look at the developed market equity of Eurozone or Canada or Australia, Japan, other Far East countries. These are very small countries. Nowhere do you see opportunity. China is down the drain. China has not even recovered to 50% of its valuation what it saw in the year 2007. So unfortunately, for an NRI, if you want to invest outside of India in the equities, there is no opportunity which is visible. Maybe you will find opportunity in some single stock or some single sector, but that cannot be said to be a general observation to say this is where you are going to make money. If you want to invest in India, where can you find the opportunities? Very interesting possibilities are there here. In India, you will find opportunity both in the fixed income as well as the equity segment. If you want to invest in Indian fixed income, the best opportunities are available everywhere for you. For example, if you want to invest your dollars in a bank FD, FCNR rates are very good. I haven't seen during my lifetime FCNR rates being so high, and the difference between an FCNR deposit rate and the Indian rupee rate narrowing down to such an extent. It almost appears that there is no difference between an Indian FD rate to a FCNR FD rate. You can make best use of parking your dollars in the FCNR. If you are a returning NRI, you can hold these FCNR deposits till the maturity, or you can even convert them into an RFC account once you come back to India. Likewise, the bank FD rates are quite high now. We haven't seen this kind of a rate for a long period of time. Probably Indian fixed deposit rates are very close to the top now. Probably the upside could be another 0.5% or maximum 1%, it looks like, unless there is a messy affair in US because of which US has to rise its interest rates. Otherwise, looking at the inflation figure, looking at the data, I personally feel there is not much of an upside possible from here onwards in the Indian fixed income space. Where is the opportunity for you? If you are a fixed deposit investor, this is the best time for you to lock into long-term fixed deposit rate. Already the short-term rates are higher and the long-term rates appear to be lower, which is an indication that it's just a matter of time that the interest rates will cool off. So you have to lock into your long-term rates now, but if you wait into future, probably the rates will drop further down. If you are a person who is retiring and looking to create a safe cash flow for you without worrying about interest rates falling down, you could consider investing in the annuities or the pensions. The annuities have a slight difference to a bank fixed deposit. In a bank FDs, you have a reinvestment risk. You can lock in up to 10 years. After 10 years, you have a reinvestment risk to renew this fixed deposit at the prevailing interest rate. You will suffer if the interest rates are lower. In a case of annuities or the pensions, you don't have that worry. You can lock into this, and for your lifetime, for you and your spouse, the interest rates will not change. Likewise, the annuity or the pension segment in India has also changed now. You don't have to pump all the money in one day. You can probably think about joining an annuity plan, putting small amounts of money, getting into a contractual obligation that you will get so much of a return when the annuity starts. So you have a fantastic option under the annuity segment. And in one of my recent videos, I have spoken about the guaranteed return insurance plan. I'll give a link to that video here in the section. The video became very popular. We had a lot of inquiries because of that. So this is a very, very interesting space. This is the segment which is paying you more than the bank fixed deposit rate. It has zero taxation. It's a great tool for somebody who is returning back to India and saving his NRI FDs from coming to taxation. You can use this particular product for a lot of objectives to be realized in your life. So guaranteed return insurance plan is one place where you can definitely park your money, and that can take out the reinvestment risk from you, that can take out the taxation risk from you, and you can make best use of current high interest rate. A word of caution here. At the time of recording this video, or even at the time of publication, this product remains tax-free. But there is a real risk here, is that the product may come under taxation in the next budget. This is the only product which enjoys 100% tax-free status. This government has blocked all routes for high net worth individuals to get the tax exemption. So if the product comes under taxation in the next budget, probably my arguments may not hold good further on. So if somebody is looking out to lock into this, your opportunity is now, and it's a matter of urgency. If it does not get taxed in the next budget, probably for another 1 year, you still have the product which is available for you to subscribe on. If you're an NRI and you want to invest in Indian equities, that is where the real juice lies. That is where the real opportunity lies. That is where there is enormous amount of money to be made. You might be knowing India has crossed the 3 trillion economy size and heading towards the 5 trillion size now. If you look at the history of the stock markets anywhere in the world, when an economy has transitioned itself from 2 trillion to 5 trillion, most of the stock markets gains have come, be it in US, be it in Japan, be it in China. The story is same. India is in that sweet spot. Right now, there is tremendous opportunity here in India. Unsaturated growth, recession, nothing to be worried about. All the required elements which are required for the stock market growth is visible here. The resident Indians are pouring in a huge amount of money. Unsaturated growth, the demographic composition, everything is favoring the growth of the Indian equities. Last year, 2022, we saw Indian equities touching lifetime highs when the US markets were down the drain. It has never happened in the past, but this is an indication to say a massive bull run is about to unfold in India. If you want to invest in Indian equities, where can you invest? If you are a person who is looking out to invest in Indian stocks directly, you can look out for opportunities in themes like Make in India, import substitution. The banks have become lean and mean. They are out of that NPMS what they had before. You can look out for value stocks. You can look out for growth stock. There is a secular opportunity to pick up the good stocks and make money in the Indian equity market. What should you avoid? You should avoid nondescript stocks. You should avoid small caps which do not have sufficient liquidity. Don't get lured by returns it might generate. get attracted by the safety and the growth prospect or the value that is there in a stock. Don't get moved by the SMS, WhatsApp forwards, and all these things that you might get. That could be a route for you to lose your money. The next route for you to invest in Indian equities is through mutual funds. This is one of the very safe routes for you to invest in Indian equity funds. You don't have to pick up the individual stocks. Rather, it makes absolutely better sense for you to build a good mutual fund portfolio. When you build a good mutual fund portfolio, you can take care of the asset allocation. You can make sure that you don't lose money. You can make best use of the bull market that might unfold in different asset classes like debt or gold or real estate. So all these things are possible to be packed into your mutual fund portfolio. Indian mutual funds are not like the mutual funds you see in rest of the world. These are very investor friendly. Their expense ratios is least in the world. Nevertheless, you need professional help. Building a portfolio is like creating an artwork. People should understand your life. People should understand your risk profile. What's your duration of stay in the market? How long do you want to stay invested? All these things have to be factored in, and a good mutual fund portfolio, if you are able to build with the help of a professional, then the next 20-30 years will see your wealth growing many times from here onwards. When it comes to question of mutual fund, not everybody can invest in the Indian mutual funds, particularly people from US, Canada, people who are in Mexico, the NRIs, have restrictions to invest in Indian mutual fund. You never could get a chance to invest in the Indian mutual fund, but at least things are looking slightly brighter now. At least a few of the mutual fund houses are accepting business from these three countries, Canada, US and Mexico. But still, the mainline mutual fund houses of India are still hesitant to accept business from these countries. Let's hope that in days ahead, probably the things will further improve. But nevertheless, if you want to do investments in mutual fund, now at least a few mutual funds are ready to accept your business. If you're an NRI and you want to invest in Indian equities, the other opportunity comes to you from the unit-linked insurance plans. People made fun of ULIP plans and people demonize these particular plans. That's not the truth. There was a time before 2010, these plans were pretty bad, but the new regulations have made these products very attractive. There is value in them. There is a definite reason why somebody can invest in that. In fact, I had dedicated one video, I had produced one complete video on this. Are ULIPs really the bad plans to invest? I'll give that link here in the card section. You can visit that video and find out what arguments I have made there. Only thing that I have to say here is that in that particular video I have mentioned that the product was 100% tax free. At the time of producing that video, those products were 100% tax free, but today up to 2.5 lakh they have 100% tax free status. That means you contribute 2.5 lakhs per annum, it is 100% tax free. Your contributions beyond that particular point will attract the same taxation as that of a mutual fund. Why do I recommend for people to use the unit-linked insurance plans? Number one, these are low-cost product now. If you are a person who is holding these plans for 7 years, 10 years, 15 years, 20 years, the cost of these plans will drop down much lower than that of the mutual funds. They have one advantage over the mutual fund. In case of a mutual fund portfolio, when you are rebalancing, at the time of rebalancing, it will suffer taxation. Whereas if you rebalance your portfolio in case of ULIPs, it will not come under the taxation. Imagine the benefits of compounding it can do for you over longer periods of time. ULIPs are not for everyone. You should qualify to invest in the ULIPs. ULIPs are for people who are below 45 years of age. If you are a person who is above 45 years of age, probably it may not suit you. If you are above 45 and you still need to invest in that, then you should consider investing in ULIPs only by making a younger member of your family as the life assured in that. Likewise, ULIPs are not for small ticket sizes. ULIPs work very well when the ticket size is very big. So in the video that I have mentioned here, I have discussed all these points, who can subscribe, who should not subscribe, the care that you have to take. Everything I have detailed here. Do not keep a doubt in your mind that the ULIPs are very bad plans. That's no more a truth, and I have debunked that notion. Which category of NRI can effectively use unit linked insurance plan, ULIPs? NRIs who live in US do not have a restriction to invest in these plans. So if you are a person who is living in US and you want to invest in the mainstream funds of India, ULIP is the best route that suits you. The next route through which you can invest in Indian equities is through ETFs, exchange traded funds. Unfortunately, ETFs is in its infancy in India. It hasn't taken off to the level that it should have taken off. It will take time. Right now, ETFs have the liquidity issues in India. So probably over the next few years, probably they'll gain prominence like the way they have got prominence in the rest of the world. The next opportunity for you to invest in Indian equity comes from PMS account, Portfolio Management Service account. India has a lot of PMS possibilities now. There are a lot of schemes which are floating. The only issue here is the entry size. PMS accounts are made available to you only with an entry level barrier of minimum 50 lakh investment. Otherwise, you are completely spoiled for choice. You can pick up a PMS of your choice. One another problem faced by the NRI community is documentation for PMS is a nightmare. The amount of documentation that is required, in-person verification, all these things makes it a big hurdle to invest in PMS. It's time the authorities look into it, make the process simple. If that can be made, PMS will become one very attractive route for the NRI community to invest in India. How much return the NRI community can expect to generate in the year 2023 by investing in fixed income or in the Indian equities? When it comes to question of the year 2023, it is safe to say probably both fixed income and the Indian equities could be generating the same number, a number which is single digit return metric. But no one knows, nobody can predict. From the best possible judgment, from my interaction with the fund managers and people in this industry, it looks possible that both fixed income and Indian equities might return the same numbers in 2023. But if you are a long-term investor, needless to say, equities will generate a much higher rate of return for you. It is safe to say probably equities will generate anywhere between 3 to 5% more than the underlying inflation as a return for the investor. One of the hesitation of NRI community to invest in India is currency devaluation. What do I think about currency devaluation? As I said, this is a changing world order. There are several developments which are happening at the trade front. NRI community is pouring in humongous amount of dollars into India. Indian forex kitty is very healthy, and it's somewhere around $550-560 billion at the time of recording this video. De-dollarization of trade is a work in progress. All these things suggest only one thing. The rupee depreciation, what you used to see in the past, will be a thing of the past. You should not be too much worried about the rupee depreciation. Probably the rupee will stabilize, or even if it drifts down, it will be a slow drift down. It will not materially impact you in any great way. And even in my personal opinion, there is a good chance that the rupee will appreciate against the dollar in the near future. Dear viewers, you have heard my views. I would like to hear your views. What do you think? Where can the money be made? Where does the opportunity lie in the world for you to invest? Please let us know your views in the comment section below. Where else can you invest as NRIs? Probably in the Indian real estate. I'm not an expert on this line. Don't take my words very seriously. But if I look at the data points, or if I look at my conversations with experts in this field, it appears like real estate is at a good entry point. Real estate has gone through a downward phase for the last 10 years. It is cyclical in nature. Real estate goes through the long periods of dull period, but today it appears that the downward phase of real estate is over and it is about to look up. Probably if somebody is looking to invest in the Indian residential space or in the commercial space, time has come for you to make the beginning now. Do consult your professional, do check through your finances, make necessary due diligences, then only you make an entry into the real estate. Don't take my words too seriously on this front. Dear viewers, if you want to invest in India and you need a professional assistance, you can make best use of our services. We have lots of services listed for you. You can reach to us through a WhatsApp message on the number that is shown here on the screen. You have an opportunity to invest wisely, safely, and your portfolios can be designed as per your risk profile and as per the life goals you want to reach. Do not hesitate to reach us. If you have an intention, send that message now. Dear viewers, hope the video that I have done today helped you to broadly understand where does the opportunities lie for you to invest your savings in the year 2023. If it did help you to understand the investment landscape, do like this video. If you are a person who is watching this channel for the first time, or if you are yet to subscribe for the channel, please hit the subscribe button and press the bell icon. Don't forget to share this video with your near and dear ones. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another edition of Your Life, Your Money next Friday. Till then, stay safe.
Press the bell icon for more details and subscribe our channel.